Now in this video, I'm going to show you a simple step-by-step strategy that you can use to make a lot of money with small accounts using volatility 75 index. Now, volatility 75 index, or in other words, VIX 75 index, is one of the best instruments to trade if you have a small account. Why? Because it makes a very huge moves, right? If you look at this chart right here, I want you to look at the amount of movement that this thing does, right? So if, for example, let's say you have placed your trade anywhere around this zone after this pullback right here, anywhere around this zone, right? Your strategy would have been in profit without the market pulling back to hit your stop loss. Because one of the biggest reasons why most people lose money in the market is that when the market is in their direction, right, before the market even go anywhere, it makes a big reversal, and it either hits your stop loss before it move again to the upside, which is a very terrible thing, right? But this thing called the volatility 75 index, it makes it easier for you to grow small accounts. Why? Because it doesn't make a lot of pullbacks, and it makes bigger impulsive moves. So if you catch one good move, then you probably are going to make money in the market with that trade, and you probably are going to grow your small account. So if you have a small account, $5, $10, $20, right, the only way or the easiest instrument to trade is volatility 75 index. And let me show you a simple strategy that you can use for that. Okay. Now, since this instrument is very volatile, right? It moves a lot, right? You want to be on a smaller time frame. So the first thing is you want to go to the 5-minute time frame, right? The 5-minute time frame is going to help you to put stop losses with smaller lot sizes and tighter stop losses that are going to help you to grow your account, right? So first of all, you want to go to indicators, right? The first indicator that you are going to put is the 13-period moving average, right? So you want to go to indicators, and you want to type in moving average, right? So you are going to find the moving average weighted, right? So go to moving average weighted, right? Once you open this, right, open your settings for the indicator, right? And go to inputs, right? Just put in 13, right? Go to style. Plot here, I'm just going to put it on color blue, and then we are going to click or apply to close. In fact, you just click apply to close and then click here like this, right? Once you do this, you are going to have your indicator looking like this, right? Now, we are going to be placing trades if the market is below this indicator, because if the market is below this indicator, we are going to sell. As you can see, if the market is below here, it's probably moving very fast to the downside. If it is above here, we want to be buying, right? So if it is going up and down like this, we want to avoid placing the trade, and we want to place the trades when it is like this and like this, right? But how do you know when to avoid, right? Let me show you what to do. Go to again moving average, find another moving average weighted again. Now in this time, I want you to take this one. I want you to go to settings and just go and click in 21 on length, put in 21 on style. Just put in, I'm just going to put red here and then make it thick. And then on the input, right, apply to open, and then make shift, go to 1. Like this, right? So you can make shift, go to 1 like this, right? Now, once you do this, you are going to have your 2 indicators that looks like this. Now you probably know where this is going because you probably have seen this before. But I'm going to show you how to make it even more accurate before I show you the trades. Just go to indicators again. Just go click RSI, relative strength index, like this. Just go to the settings, right? Period. Just put period 13 because you are using the 13-period moving average for the entry. And then for the plot, I'm just gonna remove this. I'm just gonna remove the upper limit, remove the lower limit. I'm just going to leave the middle limit, right? Highlights and backgrounds, I don't need them. Just gonna click OK, right? Now, here's what you need to do to place your trade. First of all, the first step is to identify your trend, right? So how do you identify your trend? So to identify your trend, the first thing that you want to do is you want to make sure to look for these 3 things. Number 1, the market is below both the moving averages or above both the moving average. If the market is moving in between like this, right? Well, when I say the market is moving above or below, I don't mean the closing price of that candle. I mean a few candles, right? You want to count like 5 candles going backward. Like for example, if you start here, right? I see for 1, 2, 3, 4, 5, the market have been below these two moving averages, right? But if I come here, if I count 1, 2, 3, 4, the market have already jumped 1, the market jumped 1, 2, 3, market jumped 1, 2, 3, the market jumped. So this is not a downtrend, no, an uptrend, right? But in this case, I will give you an example right here. But if you look at this right here, you can see that the market have been down here all the way down from here, right? Now, the next thing that you want to look for again is that the other, when this is happening, right, when the market is moving below the moving averages, the next thing that you also want to see is that the RSI is below level 50. This simply means that there's more momentum in the selling part of the market, right? So most people are selling, or the market overall is pushing to the downside, right? Now, once we have this, right, you see the market pushing down, right? You want to see a small pullback. Now, this small pullback needs to, so the market is down right here. This small pullback needs to come into this zone right here. Now, this is where you need to pay attention, okay? This pullback comes into this zone, but first, no candle closes above 21 period moving average, like here. This candle didn't close above 21 period moving average. It went all the way. The wick can go above the 21 period moving average, but it doesn't close above that 21 period moving average. And then next, you want to see the market coming back and closing below the 13 period moving average. And at the same time, the RSI is still below 50. And when you see all these things, the next thing that you want to be doing is selling, because we are in a downtrend. Now, what are we going to sell this? We are going to, number one, put our sell order right there, right? Our stop loss, put it above the highest point that the market got to before it comes back. So even if there was 3, 4 candles right here, we want to put at the highest point that the market got to before it came back and closed below the 13 period moving average, right? And you will see that most of the time your stop loss should be above the 21 EMA. Now, since this is volatility 75 index, I would say take 3 times the risk as your take profit. Yes, don't go less than 3 times. This is for small accounts. This thing moves a lot. If it is going into downside direction, it is going to go into downside direction. I'm going to show you an example here. Now, here's another example of a buy trade. Firstly, to buy, you want to see that the market is in an uptrend. How do you see that? You want to see the market being above the 13 period moving average and the 21 period moving average. And you want to count 5 candles, I mean. So if you count 1, 2, 3, 4, 5. For this 5, 6, 7, in this case it's 8 candles, the market has been above this period moving average right here, right? And at the same time, we can see that the RSI is also above the 50, right? And then we see a pullback right here. We see a pullback. This pullback coming down into this zone right here, right? We see a wick going below the 21 period moving average, but no body of any candle have ever gotten there. And then we see the market closing above again. Now, in this case, this candle is too big. It wasn't going to be a very good trade, but for the sake of an example, and if you were trading this in real time, you would probably were going to place this trade. So below the lowest point, 3 times the risk, right? So this one 1:3. In this case, you are going to again profit from this, right? Here's another example, a sell trade right here. If we count 5 trades, 5 candles before the market get back, 1, 2, 3, 4, 5. For the past 5 candles, the market have been below all the moving averages, right? And then a pullback into this one, 1 candle, a wick goes above, but it doesn't close above there. And then it came back below here. If you look at the RSI, we are below, confirming the downtrend. Now we place our sell trade, stop loss above that zone, take profit 3 times the risk, and again another winning trade. Now, are we going to win every time? No. It's not going to happen, right? Because there's sometimes, right, where the market is just going to reverse. But for you to avoid this, you have to avoid this trades like this, right? You can see this one is showing you every sign of being a good trade. 1, 2, 3, 4, 5 trades above these zones. But now when this candle comes, what does it do? It closes below the 21. So we don't place another one here. Good example here. This was going to be our trade that was going to end up as a losing trade, right? So we were going to buy here, in this case right here, and we were going to put 3 times the risk. But then we had the market hitting our stop loss here. And then the exciting part is that the market did go to the upside, but first our stop loss was going to be probably hit here. Now, to avoid these zones, as I said, right, this one, there was no way you were going to avoid this was going to be a losing trade. But if something like this happens, if the market closes below all these 2 zones, do not place the trade. It's going to be a terrible trade. It's not going to be a very good trade. So that is the strategy. Is as simple as that. If you want to start using this strategy, you can start testing it on your demo account first before you put it into your real account. Because just as a disclaimer, just to know that not everyone who is going to be into the market is going to make money, and risking your money into the market is very, very dangerous. So not everyone can do this, but if you feel like you can do it, just go and try it. Try it on a demo first, and then go into your real account. If you want a broker that offers this type of instrument, I use Deriv. I'll leave the link in the description below. Also, if you want to get free trading signals, you can check out, there's also another link in that description of this video. Thank you for watching, and I'll see you in the next one.